gave up managing billions to become a better investor. Episode 1. In the beginning was obsession. Hello. Over the next 100 podcasts or so, I'll be telling you about my story in the finance and investment sector. Some successes, a bunch of failures, and also many, many insights. What this podcast is not going to be, though, is some kind of flawless blueprint into how to be a great investor or have investment success. As always in life, you work that out yourself. So where did I start? Well, I guess I was about 15 actually, and two things were kind of important for this story in any case. The first was that breakfast TV was becoming big, and breakfast TV had a sort of an interesting 2 or 3 minute period each hour about the business sector, stock market, shares going up and down, exchange rates, interest rates. Sounded quite interesting. The other aspect was the Daily Mail. The Daily Mail had their own business section, of course, and that's talked about very similar sort of stuff, all this about government and policy and shares going up and down. And again, I was intrigued. So sensibly, as I got a little bit older, I did two things. The first was that I upgraded the newspapers that I was looking at and started to read a bit more the Times and ultimately the Financial Times to kind of learn a lot more about this kind of interesting sector. The other thing I did was I did an economics A-level, and consequently, when all of that sort of rolled through, ended up doing an economics undergraduate degree. And I learnt something else, and that was that economics was fascinating and interesting and very relevant, but also very boring and a bit dry. And I realized during my undergraduate course that I was sort of shifting towards different types of sort of policy and interest in this area, much more towards stock markets and financial markets and kind of reality things rather than deeply more theoretical ones. So I actually ended up doing a postgraduate course after my undergraduate degree in finance and investment. And that was much more my scene, kind of interesting, talking about not just how to become an investor, an analyst, a fund manager, but also how it all fitted together, how you could maybe make money on behalf of your clients or even yourself, or perhaps avoid making those big losses, which kind of booms and busts kind of led you perhaps towards. So by the age of 22, I graduated from my postgraduate course and it was time to get a job. Unfortunately, back then in the 1990s, it was just a bit tough. There weren't many jobs out there, and consequently, it wasn't anything immediately offered to me. So I thought, right, what I'm going to do is I'm going to get a list of every single investment company out there in the UK and apply to them all. I thought, right, I'll start at the ones beginning with the letter A and work my way down. Anyway, I didn't get to the letter B because fortunately I was offered a job, and Company A, it was actually a great company. When I look back now, many, many years later, it was a great company to have your first job with, mainly because two things were apparent. One was that I got lots of freedom, which is always a good thing for a young sort of fledgling investor, somebody trying to move in this industry. But two, they gave me the opportunity to travel to different parts of the world, meet lots of interesting hedge fund managers, because that was their business. Their business was actually managing sort of hedge fund assets. And so by talking to, again, lots of people way smarter than me with lots of interesting insights and stories and everything else, I learned a huge amount. It was a brilliant first job when I look back. And again, we'll be talking a lot more in future podcasts about what I learned and particular instincts that I found out. But after 4 years, I decided to leave. I'd done really one thing, which was I'd got it wasn't called the CFA back then, but it was a very similar sort of setup. So I'd got the formal exams, all 7 examinations had been passed. And I thought, right, I want to really become a proper analyst, a trainee fund manager. How am I going to do that? So I approached a couple of contacts, spoke to a few people that I'd met over the previous 4 years or so, and I ended up joining Company B, who actually were an actual hedge fund. So this allowed me to actually become an analyst and a trainee fund manager. They weren't global like Company A were. They were much more focused on the pan-European markets. And that was fascinating too, because it's an area I knew well. But of course, the requirements and insights really from all of the other colleagues there were different and certainly very helpful. And we'll talk actually in the next podcast about Mr. X, who was my boss there, and certainly I learned an awful lot from. So that was a very interesting, very hard, busy and hardworking 6-year period. But throughout that time, or towards the end of that time, really, I realized there was really one thing I wanted to do, and that was to become a fund manager. That had been kind of my early dream, particularly when I was doing my postgraduate course, as to what my target in my working life was going to be. I wanted to be a fund manager, the person in charge of a portfolio on behalf of clients, doing things hopefully which they could take advantage of and do well from. So eventually, after 6 years at Company B, I joined Company C. And there I was actually a fund manager, initially a pan-European one, then a global one, and ultimately actually head of the team. This was a multi-asset area, so it wasn't just equities, but bonds and other asset classes as well, but investing across the world. And in a way, it was absolutely perfect, particularly for that moment in my life. And I spent 7 years there and learned, again, a huge amount through interactions and requirements and everything else. I guess I had some successes. As always, though, throughout my time, this was apparent, certainly at Company A, Company B and Company C, there was massive market volatility and excitements, both good and bad. But that's how you learn in the investment world. And what was really interesting was that by the time I'd sort of made some successes from that, dealt with some of those challenges, even won a couple of awards in 2011 and 2012. In 2013, I decided to quit, which seemed a bit strange and certainly kind of illogical, I'm sure, for many people. But it was because that I realized that it was time to actually do something a little bit different, to actually start to learn something even deeper about the investment world, something beyond what a conventional institutional fund would teach you or allow you insight into, despite the fact that I was managing the aforementioned a couple of £1 billion, etc. And so I quit and I formed my own company, Company D, where I actually stopped kind of managing other people's money and started to relearn again how to be an investor. As strange as that sounds, sort of at that point, a couple of decades, not quite a couple of decades into my working life. So I worked at Company D for the last 10 years, and I have to say, again, and obviously this is something which will be apparent over a bunch of the podcasts over the next few months, etc. I've learned so many new insights from that, and this is really what I wanted to share with everybody on these podcasts. What I've learned, what I've seen in my career, but actually what I've realized is what you continue to keep on learning about and becoming ultimately a better investor. So really, that's where we are. That's really what I wanted podcast 1 to be about. Just an introduction to my backstory, some of the insights on what I've been doing, just brief insights, market volatility, different areas that I've been in and everything else. And then come back on episode 2 with some thoughts about Mr. X and what he taught me or helped to teach me about investment markets in particular, and to go from there. So as always, once again, I've told you so little, but there's so much more to come. So looking forward to more podcasts. Thanks so much for listening, and bye-bye.